Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Tyson Foods Inc., ticker symbol TSN. Tyson Foods is a consumer staple company that's known for being a steady dividend payer. Currently, they have a 2.3% dividend yield, which beats that of the S&P 500. At the time of recording today's video, Tyson Foods is trading for $76.74 per share. Year to date, they're down 12%. Over the past year, they're down only 2%. Going back 3 years, they're actually down 16.5%, which is down about 6% compounded annually. Over 5 years, they've traded higher. They're compounding at a rate of about 4% annually. Over 10 years, things are really looking good. Tyson Foods has compounded at a rate of 18% compounded annually. And going back prior to the global financial crisis over 17 and a half years ago, Tyson Foods has returned about 9% compounded annually in their stock price. Keep in mind that this is not including dividends. Since their low over this time frame in November of 2008, they are up more than 22 times. So Tyson Foods is trading just over their 52-week low, which is down about $24 from their 52-week high. They are a large business. They have nearly a $28 billion market cap. So for some background about the business, Tyson Foods is the largest U.S. producer of processed chicken and beef. It's also a large producer of processed pork and protein-based products under the brands Jimmy Dean, Hillshire Farms, Ballpark, Sara Lee, Ados, State Fair, and Raised and Roasted, just to name a few. Tyson sells 81% of its products through various U.S. channels, including retailers, which account for 47% of fiscal 2021 revenue, food service, which is 32%, and other packaged food and industrial companies, which is 10% of revenues. In addition, 11% of the company's revenue came from exports to Canada, Mexico, Brazil, Europe, China, and Japan. Tyson Foods was founded in 1935 and is headquartered in Springdale, Arkansas. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Tyson Foods based off of their business fundamentals. So this analysis is still going to be a work in progress, and it's an opportunity to learn in public. We'll continue to improve it and get better over time. So with that background about Tyson Foods and this disclaimer, let's get right into our analysis. Starting off with our first metric, we want their average return on capital over the last 5 years to be above 14%. So there are 2 reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. So we can build in some margin of safety for ourselves by wanting businesses that are producing returns on capital that are twice as good as average. So we'll be able to get margin of safety based on the overall quality of the business. The second reason this is important is that over the long run, a stock is going to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. So Tyson has had pretty stable returns on capital in the low to mid double digits. For most of these years, they're in the low teens. Last fiscal year, they had about 16% return on capital, and over the last 12 months, they've actually averaged about 19.5% return on capital. However, our metric is taking a look at all 5 of these fiscal years. Tyson is coming in with an average return on capital of about 12.9%, so just barely under that threshold we were looking for. So while they are earning above average returns on capital, it's just a little bit under what we would want, and so this is going to be an X to start off here on our first metric. Metric number 2 is going to be an all or nothing metric, taking a high-level overview of the cash coming into Tyson Foods. So here we're looking for revenues, net incomes, and free cash flows to be increasing over the last 5 years. If all 3 of these are up, then this metric will be a check. If even one of these is down, then this metric is going to be an X. In the case of Tyson Foods, they've been able to grow all 3 of these metrics. Their business has had growth across the board. So that's a great sign here, and this is going to be our first check here on metric number 2. Metric number 3, we're looking for earnings per share growth over the last 5 years. This is going to keep building off the metric we just covered, but here we're also going to take into account Tyson Foods shares outstanding. So over the last 5 years, Tyson Foods has grown their earnings per share from $4.79 per share in fiscal 2017 up to $8.34 per share in fiscal 2021. So they've almost doubled it over this time frame. Paradoxically, it has bounced around just a little bit, but it's also gone up pretty steadily at the same time. Also here, we're noting that there's not a lot of difference between the earnings that they brought in and their earnings per share, which signals that the company is keeping their shares outstanding nearly flat. They're actually buying back a little bit of their shares over this time frame, but it's not enough to make a huge difference between their earnings and their earnings per share growth. Still, this is what we want to see, and so this is going to be a check on number 3. Metric number 4, we're looking for cash flow growth per share over the last 5 years. This is where things get interesting here for Tyson Foods. Over the long run, earnings per share and cash flows per share are more or less going to balance out for businesses. And while looking at their fiscal years, it would appear that they've grown their cash flows per share. If we actually scroll down and look at their last 12 months, we can see that in 2017, Tyson Foods brought in $4.18 per share. And over their last 12 months, they've only brought in $3.88 per share in free cash flows. So this decrease in free cash flow over this time comes from 2 things. One, they've upticked their capital expenditures by about $400 million year over year. Also, they had this huge change in other net operating assets that affected their business to the tune of $1.2 billion. So that is something that you 100% want to look into farther here to understand exactly what's going on behind the scenes that's impacting their cash flows. Again, for this metric, while their fiscal year numbers are up, so far their year-to-date numbers are down. Unfortunately, this is going to be an X on metric number 4. To recap where we stand so far, we are split 2 and 2 with 2 checks and 2 X's through 4 metrics. Next up, metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below the amount of free cash flow that they've generated over the last 5 years. So in this case, as of the end of their last fiscal year, they had $7.2 billion of net debt. And over this time frame, during these 5 years, they've generated $9.84 billion of free cash flows. Even if we just use the past 4 fiscal years and the trailing 12 months, they're still generating $9 billion of free cash flow. And currently, their net debt is about the same today as it was at the end of their last fiscal year. So this is going to be a check here on metric number 5. This metric is important because it shows us that Tyson Foods is not an overly levered business relative to their abilities to produce free cash flows. Free cash flows are the lifeblood of any business, and a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be worth. So free cash flows can be used to pay dividends, buy back shares, reinvest back into the business, make acquisitions, or pay down debt. This metric is looking at the amount of debt the business has compared to their free cash flows. So in this case, Tyson Foods is not overly levered. We want to avoid overly levered businesses in general because they're going to do the worst during financial downturns. This is a strong sign to see here, and this is a check on metric number 5. For our 6th and final metric, we want their average 5-year free cash flow yield relative to their total enterprise value to be above 5%. This will give us a slight risk premium to the risk-free rate of the 10-year treasury. This will give us a potential reason to be interested in the business. It'll also help us learn exactly what kind of risk premium we're getting today based off Tyson Foods' free cash flows. So currently, Tyson Foods has a total enterprise value of $35 billion. So this is a more realistic economic picture of the business than their market cap. It takes into account both their market cap and their net debt position. And we found out over the course of this analysis that Tyson Foods generated just under $10 billion of free cash flow in the last 5 years. So this works itself out to an average of $1.97 billion of free cash flow in a given year. So when we divide $1.97 billion of free cash flow by $35 billion, that gives us an average 5-year free cash flow to total enterprise value yield of about 5.62%. So this is going to be a check here. Again, even if we'd be using their last 12 months of cash flows plus the 4 previous years, we'd still get just above that 5% metric we're looking for. So whichever way you slice it, this is going to be a check here on metric number 6. Tyson Foods' average free cash flows compared to their enterprise value is giving us a risk premium over the risk-free rate. Then here we're looking at Tyson Foods' dividend profile. So Tyson Foods is attractive to a lot of people because they tend to be a pretty steady dividend payer. They are a consumer staple business, and they've raised their dividends consecutively for each of the past 11 years. They have more than 33 years of dividend history overall. And as mentioned at the beginning of the video, they have a 2.3% dividend yield. However, people make mistakes all the time by blindly chasing dividends. So instead, it's important to stop and check what's going on under the hood and to evaluate whether a business's dividend is supported by the company's abilities to produce free cash flows. In the case of Tyson Foods, they've increased their dividends in all 5 years, and they've been able to increase their cash flows over the same time frame. Even considering the last 12 months, they've still got more than enough cash flows coming in per share relative to the dividends that they're paying out per share to be able to keep increasing this dividend and keep paying out likely a long time into the future. This dividend is well supported by their cash flows over the last 5 years. And while this is a snapshot of the past 5 years and is not a guarantee for the future, things certainly look like they're in pretty good shape when it comes to Tyson Foods' dividend. So this is a fantastic sign to see. If you're interested in Tyson Foods, for some of the capital that they're going to be returning to shareholders through the form of dividends. Then here we are using a discounted cash flow model to come to a potential fair value for Tyson Foods. We're starting with the amount of free cash flow that the business is generating today, and then we're projecting that future free cash flow growth with a growth stage of 10 years and a growth rate of 5.35%, which is based on their historical growth rates for free cash flows over the past 30 years. Then if we're assuming a terminal growth stage after that, for the next 10 years of them growing the business at 4%, and we add in today's tangible book value to their fair value, then you could reasonably expect about a 5% rate of return from Tyson Foods at today's prices. It looks like the business, if you're satisfied with a 5% rate of return, currently has a fair value of about $83.70. Keep in mind that this would be including their dividends. We would not be doubly counting dividends here. Their 2.3% dividend yield would be included in this 5% return over the next 20 years. Also be mindful that these growth rates are based off their historical assumptions, so it's up to you to confirm or disconfirm these for yourself based on more research into the company. If instead, using these same historical growth rates, you wanted a 10% rate of return from Tyson Foods, then based off of these historical inputs, it looks like you'd have to wait for a fair value price of about $56 for the business. Keep in mind that this discounted cash flow model and this analysis overall are not financial advice. They are not a buy or sell recommendation of any security, and it is very important that before considering any investment that you consult with the properly registered financial and legal professionals. This analysis and this discounted cash flow model serve as a beginning starting point to help you determine whether it's worth your while to dive in and learn more about the business in more depth. As a value investor, you ultimately want to come to understand a business as if you owned 100% of it, and you can really know that business inside and out and truly understand the essence of the business. So in summary, Tyson Foods checks the box on 4 out of 6 metrics. They are earning returns on capital that are just below that 14% cutoff we were looking for. Over this time frame, they've been able to grow the money coming into the business. They've increased their earnings per share. However, based on their last 12 months of free cash flow, their free cash flows per share are down over this time frame. Then we found out that even considering that, the business is producing more than enough free cash flows to be able to healthily support all the debt that the business has. We also found out that the business is paying out about a 5.5% average 5-year free cash flow to total enterprise yield, which gives us a risk premium to the risk-free rate. Then looking at the business's dividends, it looked like they were very healthily supported by the business's cash flows overall. And finally, using a discounted cash flow model of Tyson Foods, we found out that at today's prices, based off historical assumptions, which you need to do the work and validate or invalidate for yourself, that Tyson Foods could potentially yield about a 5% return over the next 20 years. If instead you wanted to get a 10% return using those same historical assumptions, you'd have to wait for the business to come down to about $56 per share. It looked like the last time the business hit that was during 2020. So that doesn't look too unreasonable. Again, this analysis is not financial advice. It's not a buy or sell recommendation of any security. And ultimately, it's a beginning holistic understanding of Tyson Foods to help you learn whether it's worth your time to dig in, do your own homework, and learn more about the business. So with that said, that's it for today's fundamental stock analysis of Tyson Foods Inc., ticker symbol TSN. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Tyson Foods with me, and have a great day.